This is our weekly market update for the 8th of August 2012. Joining me this week is RP Data's Senior Analyst, and it is Cameron Cusher, of course. Cameron, how are you?
I'm well, thanks. Thanks for having me.
Pleasure. Cameron, of course, yesterday interest rates remained on hold. What does that do for the market for the next month moving forward?
I guess it's probably really just more of the same for the market over the next few weeks. Obviously, the Reserve Bank's cut official interest rates fairly aggressively over the last 9 or 10 months, and they have seen, broadly speaking, a bit of an improvement in the housing market and a bit of an improvement in some of the other economic indicators. So they certainly have time on their hands now to wait and see and carefully consider any next move, whether it be down or up. Probably more likely down.
Yes, well, I guess being stable isn't a bad thing. Going down, well, that all makes it much more palatable from the mortgage consumer's point of view. The results over the last short while for Adelaide, in terms of auctions and so forth, have we improved on the previous month?
Well, in terms of auctions, there hasn't been too much of a change in the performance there. Auction clearance rates have been fairly steady. We recently released our index results for July, and they showed that over the month, Adelaide was actually fairly weak, with values falling by 2.5% over the month. Okay. So not a strong month for Adelaide, but remember, because it is a bit of a smaller capital city, it can be a little bit volatile month to month. Over the year, property values are only down 3.9% in Adelaide. So in comparison to 2.4% fall across the combined capital cities, obviously it's a little bit weaker, but certainly nowhere near as weak as Melbourne or Hobart is at the moment. Sales volumes are still down a fair bit. They're 12% lower than than the 5-year average, and they're 8% lower than they were at the same time last year. So I guess that's one of the big things for the market, that there's not a huge amount of sales transactions going on at the moment, and at the same time, the amount of stock available on the market is about 6% higher than the same time last year. Now, we're definitely hearing that a lot of the stock that's sitting there on the market, people are simply not adjusting their selling price and realistically not that serious about getting it sold. If they get the price they want, they'll sell it. If not, they'll just keep it on the market. But the impact of that is that there's this huge amount of stock on the market. People that are looking to buy are seeing the same properties over and over again all the time. So there's little impetus for them to go and make a decision, especially when you consider that new listings are down about 16.5% from where they were at the same time last year. So we're not seeing an awful lot of new listings at the moment, but you would expect coming into spring we will start to see a bit of an increase in the amount of new stock coming onto the market.
Yeah, that makes sense. Can you give us a snapshot going back 4 or 5 years in terms of the stock levels and transaction numbers?
Yeah, so 5 years ago, if we have a look in Adelaide back then and back in 2007, stock levels were much lower. So at the same time then there was 4,500 properties on the market and a bit over 2,000 new listings. You compare that today, there's about 1,800 new listings. So new listings are much lower, but there's about 11,000 properties on the market in Adelaide, so an awful lot more stock on the market. And then if we have a look at sales volumes, so over the last, the most recent month of data we've got is May, and there's about 1,730 sales in May of this year, and then going back to May in 2007, about 2,500 sales over the month. So you can see there's a bit of a mismatch there, and we have seen a decline in volumes. But you'd expect that, given that property values aren't rising now as they were back in 2007 across the city.
Okay. And today there was a bit of information out about first home buyers. How are they performing in Adelaide's market?
So yes, the ABS put out its June results for the housing finance data, and it showed that of all owner-occupiers purchasing or committing to loans, first home buyers accounted for 14% of the market. That's trended lower from 17.1% in April and 15.3% in May, but it is slightly higher than the 13.4% it was at the same time last year. So realistically, first home buyers are not really making that much of a comeback in Adelaide, but we are seeing an improvement in first home buyer volumes specifically in markets like Victoria and Queensland, even Western Australia and New South Wales. But that may be partly due in some of those states to incentives that are there being provided by the local and state governments in those states.
Understand that might be the case, and perhaps our government might need to look at those sorts of things to stimulate a bit more activity. Finally, just before you leave us, any thoughts on where we might head over the next 2 or 3 months?
Well, obviously, coming into spring, you'd expect that there'll be a little bit of an increase in activity, some more properties coming onto the market. Hopefully, we do see a pickup in sales activity as well. In terms of value growth, I think it's going to be fairly flat to maybe slightly falling values, more of the same of what we've seen over the last few months. But again, maybe the interest rate stability, we have started to see slight improvements in some of the larger capital city markets, and maybe that will feed through into Adelaide. But I think in Adelaide particularly, a lot of talk now about Olympic Dam not going ahead or being postponed, and that is probably having an impact somewhat on sentiment right across the Adelaide economy, and obviously also the Adelaide housing market.
All right. Well, Cameron, as usual, very comprehensive. Thanks very much for joining us. And that wraps up this week's Market Update.